UK Prime Minister Liz Truss showed no sign of backing down on her economic policies, and this may destroy the UK economy if she continues like this. The UK is undergoing several challenges, one which will strain even the most competent government and scare investors. Truss took office after an extended period of political turmoil. Britain's inflation problem is more serious than most because of the economy's unusually heavy dependence on gas. And the UK economy is uniquely burdened by the immediate impact and unfinished business of Brexit. First impressions matter, especially when it comes to economic policy. UK Prime Minister Liz Truss and Finance Minister Kwarteng last week announced a fresh start for the country with a big shift in fiscal policy and hit the ground face first. Their plan has crashed the pound, wrecked the government bond market, and destroyed the Bank of England's efforts to tighten monetary policy. After such a disastrous start, repairing the damage might be beyond them. The problem is the broader context, and Truss is determined to ignore it. Welcome to Savvy Economists and the sad tale of the fall of the pounds and how the new Prime Minister, Liz Truss, plans to keep the country's economy above water may fail. Please watch, like, and share this video. Drop your comments and observations below and subscribe to the channel for more videos like this. Let's dive right in. Truss has landed the UK in more pitfalls than anticipated. She needs to show she understood the gravity of these problems and would work towards solving them. The UK is faced with a high cost of living crisis. Rising energy bills is a grave concern for the UK at the moment. One of the inflation trackers, the Consumer Price Index, CPI, is currently at 10.1%, which is far beyond the preferred 1 to 3% range. At this time in the previous year, it was just 2%, and predictions detect that it may rise further. This is driving more and more people towards loans for everyday needs as people are out of money. According to a Forbes report, more households are turning to consumer credit to make ends meet. Borrowing on credit cards is growing at an annual rate of 13%, according to the Bank of England's Money and Credit Report for July, marking the fastest pace recorded since 2005. Across all forms of consumer credit, borrowing is growing at an annual rate of 4.5%, the highest rate since March 2020. Liz Truss has promised tax cuts to the public. Promised to reverse the tax hikes announced by Rishi Sunak as Chancellor. Setting tax cuts and fiscal incentives are well and able to promote enterprises and investors if intelligently designed. But setting long-term growth prospects right now is off the point. What is needed are ways to strengthen the already dead UK economy. Truss also suspended the procedure for letting the Office for Budget Responsibility, Britain's independent fiscal watchdog, review the proposal. The budget compounds the short-term challenges by cutting across the Bank of England's efforts to fight inflation. Additional fiscal stimulus forces the central bank to raise its policy rate even more. The sharp fall in sterling, another symptom of collapsing confidence, is a further complication. It too pushes inflation higher, again calling on the BOE to tighten further. Suddenly, that's not so easy. Alarm in financial markets also raises long-term interest rates, turning attention to the solvency of private debtors, including holders of floating-rate mortgages. Truss is reversing these tax hikes of swank by pledging tax cuts through cutting national insurance rise, suspending corporation tax rise, and removing green levies from energy bills. She hopes that a low-tax economy will help to improve the government's fortunes, but there are two reasons why this may not be an effective strategy with voters in the current economic climate. The sort of consumption and spending Truss plan requires cannot happen overnight. That's because there is a time lag between reducing taxes and seeing the effect on the population's economic position. In other words, for the economic activity to positively impact the public's economic mood, it will take years, not months. As winter draws near, pressure is mounting on the government to take quick action on fuel poverty. This is something that will not be fixed by a long-term measure. Second, cutting certain taxes doesn't guarantee the desired outcome on economic growth. For an effective tax cut as a supply-side economics tool, it requires incentivized expenditures. But with a high level of inequality, there is less incentive for wealthier individuals and corporations to spend as the marginal benefit of the tax cut falls. In other words, if you can already comfortably afford what you need, having more wealth would not necessarily affect your spending. What the government should consider instead is to introduce tax cuts targeted at encouraging expenditures. It can also increase capital spending allowance, thus allowing corporations to reduce their tax liability by investing in equipment and infrastructure. It will also help increase future productivity. Truss economic plans are expected to further support customers and help with cost. She is finalizing a £40 billion support package to reduce business energy costs as well as put caps on household energy bills. To do this, she's considering one of two options. One is to put a cap on the firm's energy costs similar to a proposal that would protect the British household. The other option is a percentage or unit price reduction that all energy suppliers must offer companies. She also plans to cap the average annual household energy bills at or below the current level of £1,971. The household's cap move would prevent household bills from jumping 80% in October. Truss is in talks with energy companies over a support package worth as much as £100 billion to offset predicted rises in average domestic fuel bills from £1,971 to £3,549 in October and £7,000 or more by the spring. Cut inheritance tax and value-added tax, VAT, put a moratorium on green levies, cancel the corporate tax hike from 19% to 25%, cancel windfall tax, and increase state pensions. But all of these cost money, and most experts have raised questions on how she intends to raise the funds for all of these. In that case, Truss might end up robbing Peter to pay Paul. British Prime Minister Liz Truss on Thursday defended her divisive economic plan and shrugged off the turmoil it has stirred in financial markets, saying she's willing to make controversial and difficult decisions to get the UK economy growing. Yet after less than a month in office, she encounters baggage of negative reaction. Financial markets are alarmed at the inflationary impact of her policies, while polls reveals that many voters see her tax cuts as an advantage benefiting the rich. In her first public comments since her Conservative government, Truss stated that Britain was facing very, very difficult economic times. Instead, the problems were global and triggered by the Russian invasion of Ukraine. She also spoke after the Bank of England took emergency action Wednesday to stabilize UK financial markets. Truss told BBC that she had to take urgent action to get our economy growing, get Britain moving, and also deal with inflation. Even though we don't expect Truss' economic plan to yield a positive economic outcome overnight, our utmost concern is to see the UK in the right state to help households and businesses fight inflation and face the cost of living crisis. Recently, the financial market was alarmed. An alarm caused when the government's announcement of an economic stimulus program that included £45 billion, $48 billion of tax cuts and no spending reductions, without an independent economic assessment of the cost and impact. The Bank of England warned that crumbling confidence in the British economy posed a material risk to UK financial stability and said it would buy up to £65 billion, $70 billion, in long-term government bonds, known as gilts, over the next 2 weeks to counter dysfunction in the bond market. This brought the central bank to engage on an emergency move after the pound attained a record low against the US dollars and government borrowing costs spiked on concerns the tax cuts would fuel inflation and drive up interest rates. It stepped in amid a run on pension funds, which were forced to sell government bonds to head off worries over their solvency, which threatened severe losses to workers' retirement funds. The bank's action helped stabilize the British currency and the bond markets. The pound rose to $1.10 on Thursday, above its record low of $1.0373 on Monday. It has lost 2% of its value since Friday and almost 20% in the past year. But many economists say the relief will only be short-term unless the Conservative government acts to restore confidence in the markets. Former Bank of England Chief Mark Carney said the government's pro-growth plan was working at cross purposes to the central bank, which is trying to rein in inflation that's running at 9.9%, near 40-year highs. This meant an undercutting of some of the institutions underpinning economic stability. Meanwhile, Truss has rejected calls to extend a windfall tax on oil and gas company profits that have been soaring as the war in Ukraine sparked an energy crisis. In her interviews Thursday, Truss was faced with questions from listeners struggling to pay their bills or forced to sell their homes because of the cost of living crisis. Having lower taxes across the board, everything from national insurance to corporation tax to income tax, helps everybody because it helps grow the economy, she said. The government says it will set out a more detailed fiscal plan on November 23rd, and economists say deep spending cuts are inevitable. We advise that if Truss plans on carrying on with the present plan, she should communicate carefully and be more sensitive to the worries of the market. Truss, then, was under intense pressure to try to reassure markets and voters during Thursday's broadcast round. But unlike her predecessor Boris Johnson, she is not a natural communicator. The present UK economical plan is currently a gamble as Truss kept on pressing on with the plan regardless of economic backlash. There's clearly a risk that backfires in the polls and unsettles people with the feeling that the government hasn't got their back, said Julian Jessup. Former BOE Governor Mark Carney on Thursday accused Truss's government of undercutting the nation's economic institutions after the first weeks of her administration saw the firing of the Treasury's top civil servant, criticism of the central bank over inflation, and the apparent sidelining of the government's fiscal watchdog, the Office for Budget Responsibility. Each time Truss was asked about the negative impact of her economic package, she deflected attention from her tax cuts by pointing to the government's energy package to help ordinary Britons this winter. When asked about soaring mortgage costs, she said the central bank is responsible for interest rate decisions. She repeatedly pointed to Russia's invasion of Ukraine as the cause of the market turbulence. She just always have a way of bypassing the question. But having ruled out a policy U-turn, the question is what comes next. There are reports confirming that Truss's government would maintain a commitment by Johnson's administration to raise pensions and benefits in line with inflation. Failure to follow through on Sunak's announcement would draw even more attention to the tax cut Truss's government is implementing for Britain's highest earners and to her scrapping of a cap on bankers' bonuses. In a later interview broadcast on Sky News, Truss said her government would be looking for spending efficiencies to ensure value for money. But she declined to give examples, and any cuts would also risk a political backlash given many government services have already been scaled back in the wake of the global financial crisis and the pandemic. Recall that during her campaign, Truss had raised a question over the Bank of England's operational independence, saying that its mandate might need to be changed. So you could say she's consistent. Her views on central bank independence are as heterodox as her thinking on independent oversight of the budget. The attention to detail is no less impressive. Whatever she could do to make investors anxious and the BOE's job harder, she has done. On Brexit, her approach is downright unacceptable. Mending relations with the European Union should be a #1 priority. The consequence of a breakdown of trade hardly bear thinking about, and the war in Ukraine offers the chance of a reset because it reveals the need for European solidarity. But the Prime Minister that Brexit is going to plan, and that will happen in only a matter of time before the European Union sees sense and surrender to her demands on trade between Northern Ireland and the rest of the UK. Truss has little room to maneuver. Going back on her administration will terribly damage her administration credibility. On the flip side, staying the course will prolong the risks and fight in the financial market and bring about a political fallout, prolonging the turbulence in financial markets as well as the resulting political fallout. As one from Britain, what do you think about the whole Truss economic system? Please drop your thoughts and observations below. As a newly created channel, we need all the help we can get. To support us, please watch, like, and share our videos. You can also subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.